Hello, everyone. Welcome to another one of our Pillar Talks episode. Today, we are joined with Arno Solomon. Am I pronouncing it correctly?
Yeah.
Okay, thank you. I'm joined by Arnold, from the CEO of Mt Pelerin, and today with me is also Aldin Ademoj, our CPO from Pillar. So today we are going to be talking about how to simplify crypto buying and selling, and also going to dive into some more specifics. Like, we're going to be talking about some history stuff in crypto, about some other solutions that Mt Pelerin does, and similar. I'm excited to have both of you guys here today. I'm pretty excited about this conversation. So why don't we just let me see how many people do we have here today? I think we have quite a number of listeners. But anyway, why don't we get started with things straight away, and let's just ask around how things are doing. Arno, you're obviously our guest, so I'm going to give you the starting stage. Why don't you tell us something about Mt Pelerin and what you guys do, and how you came to contact with us, and maybe some brief history of everything.
Yeah, sure. So maybe I can also start with the name, because as you asked for the pronunciation, maybe it's interesting also to know why such a complex name. Yeah? The Mt Pelerin is a very small mount in Switzerland that is pretty famous within the libertarians in general, but it was very famous because after the Second World War, over there they created the so-called Mt Pelerin Society, which was a group of thinkers. It was a think tank, mainly composed of Austrian economics people, such as Ludwig von Mises, Hayek, Milton Friedman, etc., but also some journalists and etc. And the whole idea of this think tank was to promote, after the Second World War, the idea of liberty as a condition for prosperity. And if we have liberty and therefore prosperity, then there will never ever be a third world war anymore. Yeah, so that was pretty much all the idea of what they were advocating, and also they were also promoting the idea of decentralization of Switzerland, etc. So this is why those topics are very important for us, and hence the name for Mt Pelerin. Yeah.
I had no idea. That is so interesting, because I know Friedman. I'm not familiar with the economics of the other ones, but the libertarian approach, in the 80s, especially in the UK, was with Thatcher, was quite pushed around to push the Overton window towards that aspect. So that's super interesting. I had no idea. Yeah, that's a cool way of thinking. But
Yeah.
I have a question. Like, so you are an OG project, if I remember correctly. 2018 is the when you guys did, I think, an STO, and that was
Yes.
predominantly regarding trying to be a fully on-chain bank. Is that correct?
Yeah, that's correct. That's totally correct. Yeah. So I'm myself in crypto since 2011, but the company started in 2018, and at that time we were indeed the first company in Switzerland to manage to incorporate our shares into token. What that means, it means that today we don't have a token like other companies in general. Our token is exactly a share. That means that when people are buying our token, they are becoming shareholder of our company. Yeah. And therefore they're protected by Swiss law as such. Yeah. So this was done in 2018. At that time, it was. Today, it sounds easy how to tokenize a company. Back in 2018, that was a huge topic, and we managed to. Because at that time, if you look at it, there were a lot of projects, trying to mimic the shares, but it was not legally speaking a share. Yeah. So the token was kind of a voucher for share, or it was designed in a certain way to have some kind of profit sharing and some kind of voting right, but it was never legally speaking a share. Yeah. What we really managed to do in 2018 with the Swiss authorities is to make it accepted as one thing. Yeah. So token holder equal shareholder, and as such, whatever the contractual agreement is between the company and the private contractual agreement is, law is above that. Yeah.
Yeah, I remember there were a couple of projects doing this sort of similar thing, but predominantly it was just, like you say, a redeemable voucher. It's like the token would link to a share somewhere else, but nobody actually done a tokenized actual share. So you hold the token, you actually have that share. So it's that was one of the first, if I remember correctly, you guys did this, or if not the first.
Yeah, we're in Switzerland. We're definitely the first company to manage to do that, and since then, of course, we helped many other companies to do the same.
Yeah, I think you have a protocol for that, right? That's the bridge protocol, where you help tokenize companies right now.
Yes, indeed. Yes, indeed. So this is fully open source, so it's not like a business line for us in this sense. So it's pure philanthropy. But yes, so the idea is that when you speak about tokenization of real assets, what really is important to understand is that a token is not a new asset in itself. A token is just basically a tokenized vehicle. Is just a technological vehicle that you can program. Yeah. And at the end of the day, it's nothing different than Excel or paper or blockchain. At the end of the day, what really matters is the underlying, what you incorporate into the share. And the bridge protocol is here to allow anyone to incorporate real asset into tokens and yet to remain compliant during the entire life cycle of the token. Yeah. So it can be compliant for compliance reason. Yeah. So for example, because you need to have some kind of whitelist, or maybe you want to have a risk-based approach, which allows to have free transferability up to a certain amount. And when you reach certain amount, you want to document the AML, the origin of the fund, blah, 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 blah. Maybe you have some kind of contractual agreement because let's say you tokenize your shares and you want to give some of the shares of your company to some of the employees. But you don't want them, of course, to resign the next day. So you want to have a vesting period and this and that. So this is basically a protocol to incorporate real world assets into tokens and to have that compliance over the life cycle. So just to give you a bit of a background, so we as a company, as I said, we are a tokenized company. But what that means and what's the advantage? It simply means that today our community owns a piece of our company, and every year, as a company, we have to do like an annual general meeting and to present the financials and to present the annual report, etc., etc. And we do that direct, fully digitally. Yeah? So it's a way to pilot a company in a digital way, so that we have like if you own at least one MPS, you can access in the wallet to the virtual room for the annual general meeting. You can vote, you can ask questions, and etc. Yeah? So and all that purely on chain. So that's really the idea of what's the next step for companies, and how can you pilot a company directly on chain? How can you manage your cap table? How can you manage your issuance, your redemptions? How can you manage your future emissions? How can you manage the transferability, etc., etc.
And have you at the same time fractionalized these shares? So is it possible to get like 0.1 out of one
No.
token, or is it like one token, just one share? That's how it represents.
No. So at the time we did it, and still today, Swiss law does not allow to have fractional shares. That means that one share is one share. So you can have one share, you can have two shares, you can have three shares, but you cannot have 1.5 shares. Yeah. So at that time we had like one token equals one share. Today there is a new trick if you want to have divisibility of the token, is that instead of having one share equals one token, you can say that one share equals 10 to the power of -9 token. You understand?
Okay, yeah. Okay, that's a nice hack. Yeah. Okay. So your original vision, which was the fully on-chain bank, is it still that you're approaching this kind of vision, or have you come across like certain
No. I mean,
traps and like difficulties?
No, definitely. So maybe to give a bit of a recall. So the original foundation of what we do is based on three pillars, which is full reserve, marketplace, and tokenization. So what does it mean? It means that full reserve, I guess everybody understand. The idea is that unlike other institutions, we don't want to put your money at risk for our own profit. So that means that if 100% of the client wants the money at the same time, we should always be able to give it back. So that's the original. Idea. And of course, if we don't, as an institution, if we don't do on-balance sheet credit, how do we make money? That's through marketplaces. And the third aspect, which is tokenization, is because we truly believe that in the future, institutions will have their balance sheets on chain in real time. Yeah. And if you think of it, that's really easy. If you think of an easy balance sheet of a bank, you have on the liability side, you have deposits. Yeah. And on the asset side, you have loans. Yeah. And at the end of the day, all that is only contracts. So it can really easily be brought in the form of smart contracts and have interoperability with the rest of the token economy here. When you think of deposit, of course, you think of stable coins, but when you think of assets, you can think of loans, and you can think of having, smart contract representing those loans, meaning that it can be owned by, different institutions, can be owned by the public in fractional $5 or whatever. So that's really the original idea. Now, of course, between the original idea and where we are right now, as a startup, we had to pivot many times. We had to adapt to the legal context. We had to adapt also to the changing regulation. We had to adapt to many topics. And for us, one of the key aspects that we have changed up until now is on the custodial aspect. So we truly believe that crypto is meant to be to empower people, to free people, and for that, people need to be educated to become self-custodial. And we think that it's not doing anyone's favor, because we know that the market is still 97% onto custodial platforms, and people are still massively afraid of getting their own liberty back, and but still we believe that the good way of that transition is by education, and not by giving to the people the let's say the easiness that they are looking for by having a custodian that would take care of everything for them. Yeah. So now we are kind of pivoting more into the full non-custodial idea, which is that people have to be in full custody of their own asset. We serve them as a gateway, but we never hold any power of their funds ever whatsoever. So even if some external authorities would ask us to do anything like that, we would not be in a position to do it. So yeah, so that's for us the important aspect to go down the route of non-custodial, and that's why for us the future is really to offer the that's why we call it bridge. Also, it's like to bridge the legacy payment routes with the on-chain payment routes. And at the end of the day, an IBAN is just a routing thing, for payments, and an address is just a routing thing for payments. Yeah, and here we want to have like a brick that will be Mont Pelerin as the seamless infrastructure for going on both sides.
So we share that philosophy in that sense that we're a non-custodial wallet pillar, that is, but we are trying to leverage the account abstraction and smart contract-based wallets to give the same type of level of experience that you would expect from a custodial wallet. So our mission is kind of spot on with yours. I believe you do have your own wallet on that side that you're using, but we are predominantly focused on this, giving the same type of experience what you have with the custodial. So we are also trying to do the same things. I think that's great that you guys are doing that as well. I think our philosophies align on that side in particular.
No, we are very much in line. And the only thing for us is that we are less focusing on the wallet aspect. For us, the wallet aspect was more a necessity. Our business is really to do the on and off ramp part, so it can be done on the web or the wallet or whatever. It can be integrated by any wallet. So that's really for us the idea. But we had to do a wallet in the first place when we started because of Swiss rules. So that's a bit of a tricky thing. Maybe I can explain. But in Switzerland, when you deliver to a non-custodial wallet, Swiss law requires us to do a so-called Satoshi test, or at least signing a message from the receiving address to prove that he's indeed the owner of this address. And as you can understand, that kind of constraints in Switzerland is kind of pushing away some customers, and especially the newcomers, because how can you ask someone to do a Satoshi test to a newly created address where he's the first time buying Bitcoin? That's stupid. So that's why by having a wallet ourselves and having the KYC and all the compliance integration, all that into the same app, allows us to abstract that notion of signing a message, so the user doesn't even have to see that happening.
Yeah, we were actually working with your team the first time that we did an integration with Mt Pelerin. We had a problem. The problem is that most of our smart contract-based wallets for new users are counterfactual, and we needed to implement some sort of way to sign a message. Now, you can't sign a message towards Mt Pelerin to validate that you're the owner of the address if you don't have your wallet deployed. So what we did is that we auto-deployed the Gnosis chain for the user, so they'll have that smart contract wallet, and they can validate that they own it with Mt Pelerin. There was some other technicalities that we needed to do regarding an EIP called 1271, which accepts signature messages from smart contracts, which we did relatively quickly, and away we went. So, but I wanted to come back to like the crucial piece, which is the fiat on-ramp and off-ramp. It's very crucial for anyone involved, because without that, we can make the user experience nice as much as we want, but we need people to be able to get in to the ecosystem. So I think a fiat on-ramp solution is the best way forward, and probably one of the key things to focus on. So job well done on that side. Can you explain though your KYC less money exchange process? So when I drafted my roadmap, it's like I was doing my research and I loved Mt Pelerin because the reason why was because I hate the document upload section. I hate it, but with a passion, with everything. And then I came across you guys. Actually, I came across a project that was a bit before you. You might have been inspired by it. Do you remember Mooney Tech by any chance?
Can you repeat?
Mooney Tech?
Moonitech, no.
No. So Moonitech was a predecessor of yours. It was a Gitcoin grant project, and they only did the cash off ramp. And I think their backend was Biddy that they used, and it was kind of a similar way, like no KYC, execute a swap and send it over to your bank account. And I was really inspired by that, but I always wanted the fiat on ramp piece. And then they sunsetted, and the only link that they put on their website was Mt Pelerin. So that's how I found you guys and started to play around with your widget, etc.
Okay,
But yeah,
cool.
yeah, that's a little bit of a backstory. You might find, I think their website is still online, mooney.tech. I'll send you a link later on. But they don't work anymore, and they only link to you guys now. So that's one of the cool things. So yeah, the KYC less money exchange system. Like why does this work? This is
Yeah.
it's the only place that does it. Switzerland.
Yeah, let me explain. So here there is maybe a bit of an explanation here because in Switzerland we are very lucky for many things, but not for crypto. As many people think that Switzerland is the best country for crypto is Switzerland. That's absolutely not true. Switzerland is the best country for tokenization, for that kind of topics. Yeah, but when it comes to crypto itself, there is a kind of dystopian behavior here. But the problem is that we have strong laws, and that allows us to challenge the regulator. So, first of all, in our constitution in Switzerland, it is said that we need to be technological neutral. What that means, it means that the regulator cannot apply a different rule to cash, to Excel, or to blockchain if it serves the same purpose. Yeah. So the regulator is here to regulate the purpose. Yeah. So we don't regulate the form, but we regulate the substance. Yeah. It's substance over form. Yeah. So that means that if something is regulated in a certain way through paper, like in a paper form, if it's the same instrument but in an Excel form or in a blockchain form, it should be treated the same way. And in Switzerland, we have if you walk into a cash exchange, like to exchange euro for Swiss franc, you can exchange up to 5,000 Swiss franc without showing your passport. Yeah, but that's when you enter physically into a shop. Technically speaking, now up until the end of last year, we had the opportunity to have KYC less for up to 5,000, therefore per day, with no KYC at all. Yeah. Since the 1st of Jan, the regulator has decreased that level to 1,000. Yeah. In fact, he has decreased it to €1, just like to comply with the rest of the world doing the same, and they receive a lot of pressure to regulate that downward. But when they did that, the entire community in Switzerland stood up against the regulator to basically show them that what they were doing is anti-constitutional, because they are basically having different rules than what the constitution allows them to do. So by challenging them, at the end, we managed to be authorized up to 1,000 per day. So today, what we are authorized is 1,000 per day. Whatever the transaction you do, it should not go above 1,000 per day. And if you remain below this threshold, 1,000 per day, 15,000 per month, 100,000 per year, then you don't need to pass any KYC. But even if you have to go above those limits, I want to stress one point that is quite important here, is that we at Mt Pelerin, we are privacy freaks. Yeah. So we are, first of all, we are under the Swiss privacy rules in general in terms of business privacy. That means that we never share any data externally. And what I mean by that is very important, because at the end of the day, today, if you look at other providers or exchanges or anything, they mostly delegate their KYC aspect. They delegate it to company that does monitoring, that does this, that does that, and all this data is being spread amongst like UK company and some company somewhere else and some company there. And because it's KYC is not a kind of a regulated thing in terms of data, this data is being spread everywhere. Yeah, and we truly believe that it's amazing that people are willing to give up that much data without in return knowing exactly where and how this data is going to remain private. With us, we do everything from here, from Switzerland, between Neuchâtel and Geneva, and our entire team is in Switzerland, which means that all the KYC operators, all the people, if we need to, for larger amount, if we need to conduct, like some kind of a short video call, all that is only flowing through Switzerland. Yeah. And even our video platform for discussing with clients for like a very large amount is also, we use Jitsi. We don't use any American-based thing, so we have deployed our own instance of Jitsi. So we really try to keep everything private. So at the end of the day, we're not a bank, and that's also a good thing because we are not part of the automatic exchange of information. And because we're just a financial intermediary, we do not exchange information with anyone except our bank on a case-by-case basis, meaning that there is no systematic exchange of information with the bank. So, of course, if the bank comes and asks because there is a kind of a suspicion of terrorist or anything like that, we have to comply, and for sure we will comply. But for anyone that is outside of that, your data is going to remain super private with us.
You skipped ahead to my next question. That's great. I wanted to ask you what the process was, but it sounds like you already answered that. Just to get back on your previous point, are you saying right now that if I exchange euros to Swiss francs, I don't have this 1,000 limit, or is that also applied to 1,000 limit? Because they try to apply different rules on different currencies, I guess. Is that the case currently right now, or is that
the rule in Switzerland is that if you exchange euro for Swiss franc or any fiat currency for any fiat currency, it's 5,000 without KYC.
Okay, so but they did apply a different rule for crypto, so they applied the 1,000, so they managed to get away with it, basically.
No, we're still fighting it. But of course, in the meantime, we prefer to comply than to not comply. But of course, I mean, our point here is very obvious. So what the FINMA, the Swiss regulator, has imposed to us is anti-constitutional. Yeah. So what they did is illegal. Now we're fighting, but again, 1,000 per day is still good. Yeah. So we're still kind of happy because 1,000 per day without KYC, 15,000 per month, and 100K per year. It still allows people to to get in and to do stuff without too much trouble, etc. And again, we work a lot with one of our specialties is also the the crypto rich, the ultra high net worth or the high net worth individuals in crypto.
OTC,
we help them because that's also one of the first thing that we did actually. It's like when people tried, and especially back in 2018, 17, when people tried to cash out, to their bank, there were like huge drama. We kept on hearing dramas all day long, and sometimes, I mean, I can give you like some stories. Like one guy, he had like a huge amount of crypto, and somehow he decided one day that he wanted to buy a house. Not a massive house, just to buy a house. So he went on Kraken and he clicked on sell, just like the 2 point something million that he needed for his house, and he did some kind of market sale, so he managed to sell that on the order book, and then he clicked on withdraw to his bank account. And what happened is that his money was in limbo in the interbanking system for 9 months. 9 months.
Wow.
So during 9 months, all the banks in the interbanking system kept on asking for the same questions again and again and again and again about the origin of the fund, of course, which is crypto. And of course, for them, it's hard. Their compliance officers have no clue on how to document that. So if the client doesn't come himself with a proper documentation that the bank is willing to accept, then it fails. And that's exactly what happened. At the end of the day, it failed, and it went back, credited back to Kraken. So what happened there is that So the message here is that, the way we do things here is a bit different. So we take the approach on the other way. So the client comes to us and we first explain, okay, so depending on the amount, etc. But we first explain that for certain amounts, there is no way that you can use your regular account. Yeah. So there are, when you want to cash out millions, you need a specific account for that. You need a private bank, that it knows, understand, that is used to deal with high net worth individuals. Yeah. And today we have a network of banks in Switzerland with whom we work, and we enjoy kind of popular than the Pope reputation in terms of compliance, etc. So they all trust us, meaning that the client comes to us. We first document the story of the client. So the client can be a kind of heavy trader. He can be a early investor. He can be a miner. He can be a degen yield farmer. He can be whatever. Yeah. We first document the entire story, of the client. We make sure that the entire story makes sense, that we make sure that everything is documented properly. And once we are ready, we go and present the file to specific banks with the client that he has selected. And we present the file. And once the account is open, and only when the account is open and everybody in the line has green light, then we do the transaction, meaning that the client sends us the crypto, we exchange it, and we load the account. And that's, on average, takes less than a month. From the day the customer first contacts us to the day he has the million cash out on his bank account, take less than a month. We believe that's exceptional in this context.
That's not bad at all. So would you say that or is that one of your predominantly revenue streams, like for your company, or like where do you see most of your success coming from?
We are a crypto broker. So as a crypto broker, we have two lines. We have, of course, the retail side, which is below 100K, and it's mostly things are mostly automated. Of course, there are still some human interventions for many different topics. And then there is the high net worth and OTC service. But both are the same at the end of the day. So just the complexity is a bit higher when it comes to higher amounts.
Right. And if I were to buy your security token and the MPS token, can I do that right now on Uniswap or Gnosis? Or do I need to do some KYC and compliance in order to get this share?
That's also the beauty of Switzerland, is that our shares can be bought without any form of KYC or any form of identification. So you can buy the MPS token, so it's called the Mt Pelerin share token, MPS, and that can be bought on Uniswap on Ethereum, or it can be bought on SushiSwap on xDai. On Gnosis chain. So that's freely transferable. If you want to participate at the annual general meeting, therefore if you want to vote or if you want to receive dividend, then therefore here you need to register with us. But other than that, you can buy the token, you can enjoy the utility attached to the fact that because shareholders, they also enjoy some free trades, they enjoy some rebates, some different advantages. So you can enjoy all that.
But you are distributing shares already? Is that also, how are you distributing shares? Is that in form of more MPS token, or what's the process behind that?
Come again?
The way you are doing dividend, are you already distributing dividend?
No, we don't distribute dividend yet. No, okay. And so to be honest, for us, we have a strong vision about dividend. A company, and especially a startup, that starts paying dividend, it's kind of how do you say that in English? But it's kind of showing to the world that you don't know how to innovate anymore. Because the entire job of an entrepreneur is to invest one, and at the end of the year make two. So if at the end of the year you don't know how to make four for the next year from the two you have, and you distribute that in the form of dividend, then it means that you're on a plateau. It means that you're not growing anymore. It means that you are basically at the top, at the peak of of what you know how to do, and you don't know how to grow anymore, and you don't know how to innovate. You don't know how to create new things. You don't know how to create value. The entire job of an entrepreneur is to create value for shareholders. So again, when you're a successful company, you should reinvest everything you earn into make it even more successful.
Yeah, to increase growth, of course. And would you say you've been successful in that side over a period of 3 years? Like, are you on a steady path of growth?
Oh yeah, no, we're very happy. I'm extremely happy with the team we have. I mean, for the major step was when we managed to get the dream team. So right now everything is on proper tracks. We have a nice growth. We have a lot of love from our customers. So yeah.
Do you expect a lot of companies to follow into your footsteps to like tokenize their shares and go down this path? And in particular, not just from Switzerland, but can companies do this as well if they are based in the UK and they want to tokenize their shares? How would that work?
Oh yeah, we have many clients from everywhere on that topic. But I would say that there are maybe sometimes some issues here. Some some people, they tend to underestimate the amount of energy it takes to do a crowdfunding, and especially when you do a crowdfunding that you do on your own, because back in the time people were going to crowdfunding platforms, and those crowdfunding platforms were doing pretty much everything for you, and they would even introduce you to invest to like all their potential investors and this and that. When you tokenize yourself, your company, and when you sell your shares to the public, you first need to create a community that is willing to buy those. Yeah. So a lot of entrepreneurs, I believe, they underestimate that part. Yeah. So when you do everything on your own, it's a huge job, to manage a community. Yeah.
Yeah, there was a platform, I forgot the name of it, over in the UK, and they tried to kind of do a secondary market for trading, which I thought was always interesting for shares, but it never really ticked off. I mean, like they were able to raise, but the secondary market didn't really work. But in your case, you have the global liquidity. Anyone from anywhere could come in and just buy this token and trade it as they want, which is quite interesting. And I'm just wondering, like, is that the vision that you are seeing for in the future, where you are tokenizing, but also creating this platform for like secondary market trading?
No, secondary market. We believe Uniswap is way better than us at doing so.
No, but more like a front end, like a if I
Oh
if
yeah,
I
no,
join
of course,
this.
no, of course, no, but of course, on that topic, yes, of course, we want to bring easiness as an aggregator, as to like at the front end level, to try to simplify interactions for the user. Yes, of course.
Okay, okay. So regarding your fiat on ramp and off ramp widget, when did you guys start developing this? What was the first time that you did it? Was it like a year ago, 2 years ago?
I think it was a year and something ago. Yeah.
Yeah. What was the decision making process, the thought process behind it? Like we need to tap the retail market and to deliver this widget. Is it just something of an opportunity that you guys saw that the regulation, I guess, allows? Um,
No, I think
I'm
it was
really
mostly a need. So it was, at least for me, for my part, it was a need. I really wanted to actually have a way to make a wire from my bank account to another IBAN, and in counterparty to receive crypto without having to log onto Kraken and to wait for the deposit to appear, and then having to click on market buy, and then having to click on withdraw to my Trezor. Yeah. So avoiding all that, for me, it was really the main driver. Yeah. So really the idea of getting rid of any um, step in the middle that makes the money sits within a third party. Yeah. So the idea is that we are a third party, of course. And when we receive your money, we keep it as little time as possible. Yeah. In general, it's never staying with us more than 15 minutes. So that's really
okay.
the idea.
Okay, and like the fiat on ramp and off ramp market is quite competitive, right? There are new ones coming on. There's established ones, ramp, MoonPay, etc. Like, is there an idea in your head, like how do you plan on staying competitive in this rapidly evolving and highly competitive market?
Yeah. Of course, you're right. Yeah. So for us, the idea is to we need to grow a bit faster, and we also want to um, make a kind of front end. This is basically the work we're going to work after the summer, is to rethink the entire user experience. So the service will be the same, but the experience of the user is going to be slightly more sleek, I would say. Yeah, and we hope also to have a kind of wow effect. But really, the idea is, at the end of the day, to be a kind of Revolut on chain, like you could have an IBAN for Euro stablecoin, but you could have an IBAN for British pound stablecoin. You could have an IBAN for Swiss franc stablecoin. You could have an IBAN for dollar stablecoin, but you could also have an IBAN for Bitcoin. You could have an IBAN for Ether. You could have an IBAN for Ether on Optimism. You could have, whatever. Yeah. So this is really the idea of how you bridge those two, the world of IBANs and the world of addresses. Yeah.
Have you ever heard of the project called Monerium from Iceland?
Yeah, of course.
Yeah, I think you're going down the same direction if it's like an IBAN and minting of like stable coins, etc.
Yes and
or
no.
not
So
really.
I would say the main difference here is that Monerium decided to go down the route of creating their own stablecoin, which of course is something I was personally eager to release my own stablecoins from Switzerland because again we have a very good network of banks here that trust us. We know exactly how to do that in Switzerland in the I would say the safest way. It's called a bank guarantee, meaning that the bank is actually guaranteeing all the deposits, and therefore even if we disappear, the bank has by law the obligation to give back the money to everyone. Yeah, so we know how to do stable coins in dollar, in pound, in euro, in Swiss franc, in whatever, and we never did it for a simple reason. Is that when you create yet a new stablecoin, the problem that you get on the first day is that there is no market for it. Yeah, the next day, what you do you have no quote against Ether, you have no quotes against other stablecoins. Your stablecoin is basically useless. Yeah, so you need to bring a lot of liquidity, a lot of effort, create new markets in order to bring some kind of interoperability. Yeah. So at that time, when we had that in mind, I met Pascal from Jarvis. I don't know if you know him. And that's when we actually, he really opened up my eyes on those topics, because he was having a project to issue stable coins, but that would be backed by USDC instead of backed by a bank account. And what has changed here is that because it's backed by USDC, it means that even if you issue euro, Swiss franc, pound, whatever tokens, you still have on the back the liquidity of the USDC in a single single swap that would happens to be two transactions. Yeah, so you redeem your euro token for USDC and USDC swap for anything because that's the most liquid stablecoin. So when Pascal explained that to me, for me it was obvious that releasing yet a new stablecoin that would have all the collateral in a bank account, meaning that it's not interoperable with the rest of the token economy, would actually be very inefficient. Yeah. And what we see with I have a lot of respect with Monerium and the other Euro E because there's two Euro E. There's another Euro E from Finland also that was released recently, claiming to be the first legal blah 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 in Europe. What you see is that there is very very little volume, very little things happening there because it's missing the link for the rest of the interoperability with the token economy. Yeah? So I know that Jarvis is trying to make this bridge with those all those stablecoin, but it's
No, this is exactly the same problem that I saw with them, and I waited for a long time, and they finally opened up a liquidity pool for their. I think it was the euros, not the USDC. It's not big; it's like 100K, but it starts the process. I always thought about like how are they gonna do this in a liquidity way because I have no use for this stablecoin right now. It's great that I have it in my wallet, but I can't swap it for USDC. So they've started this process. Now, I'm not sure how they convinced the liquidity providers. Maybe they convinced them over the fees, etc. But it is an interesting one because the use case is like I'm sending something to my IBAN and I get immediately a representative that's like minted, so I can use it immediately. Is that the kind of direction that we are thinking as well? Like you created an IBAN for any wallet, and
exactly
you're basically sending, but you're minting, yeah.
So for us, the next step is to look at it as a non-custodial Revolut. Yeah, if you think of it, our view is that at the end, so without the part of the stablecoin, because again, I don't think we will issue our own stablecoins, even if we are in capacity to do so, and we have all the relations with banks to do so, and it would be very straightforward for us to do. I believe we will work with the winners of the stablecoins. Yeah? So today we at Mt Pelerin we tend to add all the stablecoins that are on the market. at least the one that we find that are solid, on the back, not some kind of weird project, but at least everything that we believe is solid on the back, we want to add it because we truly believe that stablecoins is gonna be one of the key driver for the next wave of adoption. But again, we don't know who's going to be the winner of those stablecoins yet.
No, and one of my questions was to be like, how do you make your selections of like which assets you add? Because I noticed as well, you have the traditional ones, but you have a lot of stable coins and a lot of euros, etc., like that you're doing. So, is there any particular, I don't know, regulatory restrictions where you don't want to do too much due diligence on brand new projects or stuff like that? Like, how do you go about this?
I would say it's a bit subjective. So the first thing that you should know is that we've never ever made anyone pay to be listed with us. So that's not our business model. So when we add a token, is because we believe that it's an added value for our community. It's gonna be an added value for users. And of course, one of the key selection point is also how big it is, because there are things that we're willing to support from the beginning because we have a vision that it's going to grow super fast. But there are things that, for us, it's costly to add in our process new tokens and to, manage because also for us, it's liquidity that we need to block here and this and that. So we tend to make sure first that there is enough traction on the back so that when we offer that token for the buy and sell, there would be enough market here to cover the cost of adding such token.
Yeah, one of the use cases that I'm particularly, so we have a sister company called Etherspot. You can check out the website. It's like the back end of Pillow Wallet. And fiat on-rampers come actually to us like, hey, we capture our liquidity from centralized exchanges. But there are some obscure tokens that are not really existing on centralized exchanges. And we want to use transaction batching from your product to fetch this new token, or like not a new token, but a token that's not very much existent in the CeFi world. And we are actually helping them to fetch this token so they don't have to do this to themselves. So we use a variety of bridges, etc., like that. And it's all about treasury management for them on that side. So it is possible to do that, but it's a question of like, do you want to do that? And then there's like all sorts of other things that they want to do, like buying NFTs directly, and like how would that go? My question to you is, I know that you guys have recently launched like UK faster payments for bank transfers, which is great. You already have card payments, you already have bank transfers. Can we expect any other payment solutions like Apple Pay or Google Pay or anything like that?
Yeah, of course we can add that. So the reason why we didn't add it up until now, it's because it adds extra costs for
the user.
But yeah, of course. But it's not little. I mean, those extra layer intermediary are taking a significant chunk here.
But is it not almost on par as the credit card or the debit card, or is it much more than that?
No, it's a bit less than the credit card, but still, credit card is stupidly, insanely expensive. Huh?
Yeah, because of the chargeback, right? So like you guys need to
cover on top of the chargeback, but also just the processing cost in general is very expensive. So you have like, every time there is a card, so even card declines cost you. Huh? So even if you decline a card because you suspect anything, it's going to cost you. Every authorization is going to cost you, and then you have a percentage on top, and then you have cross-border fees on top, and then you have this fees on top, and blah 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 blah. So no, card fees are completely insane. So in this regard, when you use Apple and Google Pay, it's an extra fee on top of that. Yeah, so it's not competing with that.
I guess the problem is, users like the protection of the card because they can call their bank and say like, "Hey, I didn't do this payment. Can you please put it back?" With bank transfers, they don't really have that. Once it's done, it's executed. It's over for them on that side. So I think most people are willing to pay the extra charge because of that reason, because they're so accustomed to paying with card instead of bank transfers where they have to go into their app, type over the bank account, get the right reference into it. And it's, well, now that you have UK faster payments, that might not be the issue anymore because it's quite quick. But for other countries, like, I remember back in the day that Ramp in particular was very big on open banking. What's your view on open banking? Do you see that progressing, or is that kind of staggered right now and it's not really progressing that much?
For me, it's not progressing at all. To be honest, open banking has been a huge topic 5 years ago, and since then, we didn't see. I mean, we see new actors popping up within this industry, yes, but from the legacy banking industry, nothing is moving.
Okay. Now, I have another question about your countries. You have a lot of exceptions to the countries. Obviously, some are quite obvious, but there's one that sticks out. Obviously, the big market, which is the US. It's like, do you plan on supporting them as well in the future?
Yeah. So that's that should have been live already, but because of the recent problem in the US, so we as a company, Mt Pelerin, we are a Swiss company. But we created a subsidiary in the US because we cannot, I mean, we can potentially, but we don't want to serve US customers from our Swiss entity. So we want to kind of segregate the risks here. So we created a specific entity for the US. This entity is now registered as a money service business with FinCEN. We have everything in place, etc. Now, the question is, with which bank and which payment service provider are we going to work? We were about to work with one that basically a lot of people are working with today. I mean, I cannot name it, but I mean, you can guess. Somehow, with the recent situation in the US, they've kind of being more cold or frozen, or I would say like kind of freezing new openings, etc. So right now we are looking at switching, and as soon as it is done, then we're going to open up the US market. But unfortunately, because the US is going to be served from the US and not from Switzerland, it's going to be under US law, meaning that there is not going to be KYC free things or anything like that.
No, I expected not to be. But I mean, like you're right, the environment is just either not clear or very hostile for crypto currently in the US. So it always shifts a little bit. But
I think that for our point, you know, what we do here as a pure on and off ramp, meaning that at no point in time we have custody of the funds of the clients. At no point in time we can potentially add more risk to the clients, and that we, in the US at least, will only serve the on and off ramp purpose. You know, no third party payments. And that's important because this is a distinction, you know, like in the US, if you do pure on and off ramp, you know, serving the client, so the client is going from him to him, you know, he's just changing money from him to him. There is no transfer of money to someone else. It's easier to work in the US this way. But as soon as it's possible to make a transfer to a third party, then you end up into a new category of rules that requires you to be registered on a state-by-state basis. So that means that you need to go through every single 50 state of the US to get the approval. Yeah, and that is, of course, but that's only if you do money transmitter. If you don't do money transmitter and you just do money service business, then you don't need to go down that route.
Okay, that's interesting. So. Two things that I wanted to ask you, like regarding the evolution of the widget or your company at least, is that have you considered implementing like a fiat to NFT? That's one question. And have you considered going in a bit more advanced route than just holding the assets? So let's say, you know, some sort of transaction batching process from like I buy with my fiat and I go and deposit and borrow or something like that into an Aave pool. Have you guys thought about this internally? Like, if there's something that you might, because I see this evolving.
No, that's a very nice feature, and of course, this is something that if we have requests for those, then we will look it up. But we believe that right now our strength is more to be on the background, to be the infrastructure, and to have guys like you, by the way, on top that builds those things. Yeah.
No, that's one of my key goals. Is like we have a certain investment coming up in the Pillar wallet where we are trying to give the user options of like actively using the assets, because not only, you know, when you get ETH, for example, you know, ETH is great holding it by itself, but ETH is even better if you're earning more ETH on top. So like this advanced routing position, like I'm always thinking about the UX and what would the UX look like, and if I could get a fiat on-ramp that would work with me to go from fiat to like a stake position of ETH, so the user immediately has that position. That's the goal, the holy grail for me, because then the user doesn't have to buy ETH and then do some further actions, etc. It's just like a centralized solution, right? The same mission we have. It's a custodial aspect, non-custodial aspect, but in a custodial way. And I think that that's going to be the future. I see a couple of them that are doing this sort of thing with contract calls, but none of them are doing it successfully. And what about NFTs? Do you guys want to tailor for that kind of purchasing of NFTs, like fiat to NFTs directly?
Potentially, yes. The thing is, yeah. I mean, for now, it's we are very much in this moment where we are open to new suggestions as to what kind of new business should we open. Yeah. So NFT is not something we've been treated up until now, but we're of course open to it. We're not ourselves as a company very much into NFTs. Yeah. So myself personally, don't own any NFTs, and I've never ever traded any NFTs. So that's maybe why we're a bit late on that topic. But I know that some on my team are, and yes.
No, I agree. I'm the same way. I've not traded it. I never bought it. But the users want it and they love it, so I have to tailor for them. Well, I don't have any questions. Do you have any questions for us about smart contract-based wallets or Pillar in general? Like I can brief you in just to finalize this conversation.
No, I know what you do, so I think it's brilliant, and
because
we're very happy to.
We're also in Switzerland. If you're not aware, like we're a foundation in Switzerland, and AG that runs it as well. And most recently, we have set up a DAA in Switzerland for our DAO, which is launching all sorts of projects regarding staking mechanics for the Pillar token. So we're pretty much close to line.
Sorry. Can you repeat? You're going to offer staking mechanics from Switzerland?
Yeah, from the DAA.
Wow, cool.
Yeah, very cool. So it's going to be just basically. We're started off with the Pillar token itself, and the users can stake the Pillar token. But at the back end, we're going to set up nodes that like accumulate ETH and then distribute the ETH to the Pillar token holders.
Wow!
So it's kind of like liquid staking, but not in the same way. It's actual nodes. So that's what we're doing next. But yeah,
when is that going to happen?
Hopefully by the end of this month or end of May. Yeah.
Amazing. Just send me a DM, please, when it's live.
Yeah, you'll see the notification. we're gonna be up and ready to promote as much as we can.
Cool.
Yeah, definitely. Arnaud, it's been a pleasure chatting with you. Hope to meet you someday. Let me know when you're in London, and I'll let you know when I'm in Switzerland.
Excellent. Perfect.
Yeah, Arnaud, thank you so much. I just want to thank you as well. You guys have been wonderful today. I basically hadn't had to do anything since I did the introduction. You guys basically had a great conversation back and forth, so I had to do nothing in between. This will also, just to let everyone know, this will be recorded, so expect our recording to go live tomorrow. So in case someone missed it or you want to let your friends know how the conversation went and how interesting it was, you can see it on our YouTube channel, just so you know. And I think that would be it, honestly. Unless you guys have anything else to add, I think we can close it down.
Well, thank you very much. Thank you for having me today.
It was a pleasure. It was a great conversation. Just finishing the hour mark. It was very well. Thank you everyone for joining. It was great to have both of our guests today, and hope maybe we can do something together again in the future. Who knows? Stay tuned. Obviously, follow both of our social medias for anything else coming on along in the future. Thank you for joining, and yeah, I hope to see you on many more Pillar Talks, and also be sure to follow both teams, like I said before, and that will be it from us. So thank you so much.
Thank you.
Thanks, guys. Thank you, Arnaud. Take care. Bye.
Bye, guys.